Lululemon just collapsed by 20% today. If you want to know if this is a very good investment opportunity or just a value trap, stay tuned and listen until the end of this video. I'm going to go through all the fundamentals of Lululemon, valuation, best case, worst case, and best case scenario. I'm going to analyze the market position of Lululemon and determine if the stock deserves a place in your portfolio and if it's a good candidate for long-term investment, for a swing trade, or just a pass. Stay tuned. Welcome to Smart Investing. If you want to subscribe, like, and share the video and leave a comment, please don't hesitate to do so. So let's go straight into it. So let's look first at what happened today. You can see the share was actually recovering from the low of 227, was a very, very strong support, 237, 230. You see it rebounded 2 times back in July 2024 and 7th of April 2025. You see it's very much rebounded very strongly from the low of April of about 43%, which was a massive upside in 1 month's time. And Lululemon just reporting earnings today. We're going to go through the numbers, but basically they beat both on earnings per share and revenue. Very poor guidance. We're going to understand why the poor guidance, and that's actually that really explained the drop of 20%. And you can see the shares were moving from a level of 340 to a level of today right now of 263. So the key question is what we're going to do from now. Is it a good opportunity or not? Let's go through all the fundamentals. Okay, let's see. Let's start with the free cash flow analysis. So discounted cash flow analysis. We're gonna assume a base case scenario of 10% growth, a worst case scenario of minus 20% growth compared to the 10%, which means it's going to be 8% growth, and the best case scenario is going to be a 12% growth going forward. Because obviously the company is entering a normalizing market. The growth that we have expected of the last few years of around 25% on average for the last 5 years is not going to be sustained going forward. And we're going to see what is the critical valuation of base case, worst case, and worst case scenario. So basically, this is the usual free cash flow analysis. You take the free cash flow, you calculate the base case, the annual value, the net present value of all the cash flow, and then you calculate the company value and you divide by the number of shares. I mean, you all know all this is working. We're going to assume that the margins and the net margin, gross margin is going to stay the same. We're going to assume a WACC of 8.5%, and we are going to calculate all that, and we're going to arrive of the price of base case scenario of $240. Best case scenario is going to be $275, and worst case scenario of $211. What is interesting is that what is the bull case for Lululemon right now? This is basically the DCF suggests a base case value of 240, and the current price is 264, which with an upside of 275 for the best case. So the stock is below analyst average price of $345, because if you look at the expected analyst price, you can see here, yeah, now the price has come down because there's been a lot of revision. So we have an average price of 306, which is an upside of 16% upside from now. So let's continue the presentation of Lululemon. The company has a strong fundamental with high gross margin of 58%, consistent profitability of net margin of plus or minus 16%. And this really shows that Lululemon is a premium brand and it commands really high margins for the sectors. The bull case also is international growth. In Q4 2024, it shows a 38% increase of revenue internationally, particularly in China, offsetting US weakness, which is basically the main bread and butter market of Lululemon. The opportunity for bull case is probably a market overreaction. The 20% drop may be exaggerated given the inline Q1 results and historical outperformance that beat earnings per share estimate in the last 4 quarters. So you can see that Lululemon overall you see, if you go back to, even back to 2021, every single quarter, you can see in green, it has an history to beat every single quarter, you know. The only quarter it didn't beat was in actually during the COVID time, June 2020. Otherwise, you can see, even if you go back to 2019, always beat expectation. That's an incredible company, you know. You can see that it beat always expectation. So, what is the bear case for Lululemon? Competition, obviously. Emerging brands like Alo Yoga and Vuori are gaining market shares and challenging Lululemon dominance. You can see also that the growth is slowing. I mean, we have seen the guidance indicate that single-digit growth of 5 to 7%, a sharp decline from historical trend, raising concern about the demand for Lululemon products. I mean, that's probably about explain the drop of 20%, because Lululemon has grown by about 20-25% on a compounded annual growth rate over the last 5 years. I mean, now over the last year it grew by 10%, and if it actually have a guidance of 5 to 7%, you can clearly see that there is a decreasing annual growth rate of revenue for this company, and that's what the market doesn't like, you know. And also, obviously, you have macro risk about the tariff, especially with everything related to China. Inflation could increase the cost and squeeze margin, especially as Lululemon rely heavily on international manufacturing. What has been the trend actually of revenue, net income, and gross margin and net margin for Lululemon? We've discussed about it. It grew from 4 billion in 2020 to 10.74 billion in 2024, with a peak growth of 42.3% in 2021 post-COVID recovery, and the growth slowed to 11.6% in 2024, reflecting a normalizing market. So if you have a guidance of 5 to 7%, it's even worse than the normalizing growth rate of 11.6% in 2024. And that's probably why the market overreacted today and the stock collapsed by 20%. Net income increased from $489 million to $1.75 billion, with a strong 65.5% increase in 2021. But 2021 is an abnormal market because it's post-COVID recovery, and a lot of companies witnessed this very sharp increase of the fundamentals and sales. I mean, this is not only Lululemon. Growth moderated 12.9% in 2024, which is probably a normal growth rate for a company like Lululemon, showing resilience despite higher costs. The gross margins is stable at 56-58%, with a slight uptick at 58% in 2024, indicating a pricing power for Lululemon. Net margins has improved from 13.4% to 16.3%, reflecting an operational efficiency. So you can see the graph clearly. Lululemon, I mean, this is the type of graph you want to see for a company. I mean, it's straight line up. This is quite an amazing company, and whether it's the net income straight up, revenue straight up, and you can see the gross margin and net margins being very stable. I mean, what do you want more for a company, you know? So what we can see, of course, with the discounted cash flow analysis and the analysis of the trend of fundamental of the company, is that at the current share price of 264, post drop of 20%, Lululemon is trading slightly above the base case value of $240. And remember, the base case value is a growth of 10% of revenue, and keep gross margin and net margins the same as it is, and with a WACC of 8.5%, which reflect more or less the cost of capital for a company in the sector. So you can see that the best case scenario is 275, and you have a worst case scenario of 211, which suggests actually a slowdown to 8% growth, which is basically what they are forecasting. You know, they're forecasting 5 to 7% growth. Then that's why the market is overreacting, you know. So it suggests that there is a potential for undervaluation, especially if growth aligned with base and best case scenario. However, the risk like competition and macroeconomic pressure like tariff could push it toward the worst case scenario, and that's what the market is probably worried about. So if we go into the detail of the last earning and guidance that we've just published right now, you can see revenue with 2.37 billion, an increase of 7.3% year over year, in line with expectation of 2.36 billion. So again, they beat slightly, but they are more in line. Earning per share of $2.6, in line with consensus of 2.59. So you see, they beat both on bottom and top line. but it's not like staggering beat, you know, it's just like more in line with the guidance. Guidance for Q2 2025, revenue 2.535 and 2.564, below consensus of 2.57. So it's not like a massive underperformance on expectation, but still it is psychological. And if you guide less than what the market expects, so you should expect a correction. Earning per share of $2.85 and $2.90, slightly below the consensus of 3.332. This is a massive underperformance with the consensus of the streets. And that's really what the market reacted. I mean, the EPS of 2.85 compared to an estimated of 3.32. I mean, of course, the market has to correct, you know. We are talking about 15% underperformance for the guidance of earning per share. So, and the stock collapsed by 20%. So you see, the guidance more or less 15%, the stock overreact and collapsed by 20%. So that means it's pretty much in line with the guidance, the below guidance that the company has published, you know. So guidance for 2026, revenue of 11.15, 11.30, below expectation consensus 11.24. So the revenue actually both in 25, 26 is slightly below, but it's not dramatic. It's more on the earning per share, you know, earning per share 14.58, 14.78, down from prior guidance of 14.95, 15.15, and below consensus of 15.03. So 2026 is more in line with guidance, but slightly below consensus. So why the stock has dropped by 20%? So the stock fell from $330 close to $264 in just today. I mean, that's a very sharp drop for one stock, you know. Again, what we have seen is that because of the disappointing guidance, weak comparable sales, you know, and macroeconomic concern with the tariff and international competition and so on, and the cost of production, because if the imported goods is more expensive, then the margin will get hit. That's probably the reason of the downgrade and the stock fall, you know. There's been a lot of analyst downgrades, you know, for example, key banks, Evercore, ISI, lower the price target to 350 and 320, reflecting reduced confidence. But again, these analysts, I must be joking, you know, their price target is still 350 and 320. We are 264, you know, we still have a huge increase potential even if you reach this target price, you know. And you see the consensus, we've seen it on the TradeView website, is around 300. So you still have a massive 20% or something like 15-20% increase to the average consensus price. So basically, what is my take for Lululemon after the drop of 20%? Lululemon definitely is a moderate buy for long-term investor. You know, the 264 price, Oracle price. You also see that we are reaching a very strong support zone. You know, you see, we are reaching a very, very strong support zone. You know, that support zone is around here. You see, because you see we've hit it one time, two times since 2020. One time here, one time here. We've hit it another time here, another time here. So that means we are pretty much very close to the very strong support zone of 260. 260 to me, it's a very good price to enter the stock if you are a long-term investor. So do I want to play Lululemon for a swing trade? I don't want to play Lululemon as a swing trade. I've done it in the past. I've been burned by Lululemon. The same thing with Nike. I don't like the sector that it's operating on, discretionary apparel, and the competition is very, very fierce, and it's very difficult to get some clear visibility about China, about tariff, about all this uncertainty, and about the competition and how they're going to progress. So for me, I make it a pass. You can see that the brand international expansion and loyal consumer base are the strengths of Lululemon's. Definitely, they have a very strong base and very strong fan base. Short-term risk is obviously competition and tariff. And if you want to mitigate the risk going into an investment in Lululemon, you can consider going in by selling a put options, maybe 10% below the current price. So if it hit 10% below, then you just have a price that is 10% below the two-day price, plus you get a premium. So you get a very, very good entry price for Lululemon. Then in this case, I would sell a put of 260 260, you will have a very good premium if you sell it at 260 right now. I'm going to show you how much you're going to get, at least if you have an expiry of, let's say, the end of 2025. And you can also dollar cost average, you know, you can go bit by bit and invest in Lululemon very bit by bit, you know. So always never forget to not to invest more than 10% in one single stock in your portfolio, so you can manage the risk. So let's see how much premium you will get if you sell a put of a contract. But be careful, you have to buy 100 shares of Lululemon, so it's a contract value of $26,000. So you need to have a large portfolio, have at least $300,000 to get that position of $26,000, because I don't recommend you expose yourself of more than 10% of your portfolio, and you will get a premium straight away of $2,800 in your pocket. So your break even will be 230, which is largely below the low of the market. 330 is the very, very strong support that we've seen historically for Lululemon. That will be your break even just right here at 230. So that's a very, very good break even if you want to play that put options. And if you are not exercised, let's say Lululemon recover in price by the end of the year, so you will just pocket $2,800 in your pocket for being exposed to $26,000 of trade. So that's not a bad deal, because in less than 6 months you will get a bit more than 12% return. Okay, so that's my video for Lululemon. So what do you think about Lululemon? Do you think this is a good investment? Do you think that the drop of 20% is a real opportunity to start to invest in DCA in the stocks or sell or put options? Do you think it's a good candidate for a swing trade? Or do you think that is just like a value trap and let it just sink a little bit further to the level of 230? Would you wait 230 to be hit to start to make a position in Lululemon, or just you pass it completely? Leave your comment below. Thanks so much and see you next time.